Hello everyone and a very good morning to you. This is Rachel live from Kalkine Studios and you're watching The Opening Bell. Inflation expectations are driving the market volatility amid commodity and crypto space volatility over the last few days. Besides that, the virus concerns closer to home and across the world are keeping investors jittery. On that note, let us cast an eye over how the market chart is panning out so far today. Well, the ASX opened lower this morning, dropping 0.23% to 7,140.6. That's after setting a new 52-week high. The bottom performing stocks in this index are ARB Corp and Eagers Automotive. Nearmap and Appen also slid amid a broader tech sector dip. The Information Technology Index was one of the biggest losers of Monday's session, falling 0.9% to 1,924. Tech giants such as Afterpay, Zipco and Xero dropped between 1 and 2% yesterday. Meanwhile, the A2 Milk Company and Fortescue Metals are the leading gainers so far today. Domino's, Dexus and APA Group also recorded gains during early trade. Nine Entertainment also soared on signing agreements with Facebook and Google following Commonwealth Government's enacting of News Media Bargaining Code. Moving on now, today the benchmark index made a new all-time high of 7,203.3, surging past the 7,200 mark for the first time. However, the market faced some selling pressure from the higher levels and closed 0.25% lower. The US market was closed on account of Memorial Day. The US stock market rose on Friday as investors shrugged off a stronger than expected inflation reading. The Dow Jones rose 0.19%, while the S&P 500 gained 0.08% on Friday. The Nasdaq Composite added 0.09%. Market players continue to remain jittery today as COVID-19 infection is again picking up pace in Victoria, while market participants await the country's central bank's decision on cash rates later today. Australia's second most populous state of Victoria is the epicentre of the country's latest coronavirus hotspot. Reported 9 new cases of community transmission, taking the current cluster to 54. Victoria went into a strict 7-day lockdown on Friday after new COVID-19 infections in the state capital Melbourne ended its 3-month run of 0 community cases. The swelling in numbers, particularly a mystery case in a worker at an aged care home in the city, have raised questions over whether the lockdown will be extended beyond the 7 days announced initially. The prospect of a larger outbreak in aged care homes is highly concerning, given that hundreds of elderly Victorians in such facilities died of COVID-19 last year. The latest outbreak was caused by a returning resident who left hotel quarantine in neighbouring South Australia after testing negative, but later tested positive in Melbourne. Medical officials have said the latest COVID-19 variant, first detected in India, was likely to be more virulent than the original strains, taking just 1 day to infect another person, compared with earlier strains which can take around 5 to 6 days. On that note, there's a non-exciting development on the consumer confidence front. ANZ Roy Morgan consumer confidence dropped 2.8 points to 111.4 this week as Melbourne and Victoria were plunged into their 4th lockdown. Moving lower this week was sentiment around the Australian economy over the next 5 years and whether now is a good time to buy major household items. While the latest manufacturing purchase managers index data reflects some positive picture, a monthly gauge of Australia's manufacturing sector grew at the biggest clip on record in May, bolstered by the red-hot recovery across the economy. The manufacturing purchasing managers index was compiled by IHS Markit, that's a financial data group, and it reached 60.4 in May on a seasonally adjusted basis, up from 59.7 in April. Moving on now, let us look at bond yields and the currency market. The US dollar came under pressure on Monday and retraced from the day's high of 90.115 to close the session flat at 89.995, registering its second consecutive monthly loss against the euro and the pound. The dollar struggled broadly ahead of European and US data this week that will help to gauge the pace of the global economic recovery. While the Australian dollar traded higher on Monday and marked its second consecutive monthly gain ahead of a monetary policy meeting by the Reserve Bank of Australia. The gains are also supported by high commodity prices. The US Treasury yields fell on Friday in a shortened trading session on the back of month-end buying by portfolio managers, with the investors largely shrugging off a rise in US core inflation above the Fed's target of 2%. Moving on to our next segment now, let us zoom our lens on the Australian share market charter for the day. Let us look at the energy sector first. Australian energy players such as Santos, Beach Energy, Oil Search and Woodside Petroleum could trade higher today amid an oil price uptick. Oil prices traded higher on Monday, with Brent trading near $70 a barrel on growing optimism that fuel demand will see an uptick in the next quarter, while market participants are maintaining a cautious stance ahead of the OPEC meeting this week. Brent crude futures settled on 0.9% at $69 a barrel, while West Texas Intermediate crude rose 0.9% and closed at $67 a barrel. Let's look at the yellow metal space now. Australian gold miners have already been playing the catch-up game since the gold bottomed out in March. Today, the positive momentum is expected to continue for ASX gold players such as Newcrest Mining, Northern Star Resources, Gold Resources and De Grey Mining. Let us move now into the miners space. Benchmark iron ore futures on the Dalian Commodity Exchange for the September month delivery surged 5.2% to 1,106 yuan per tonne. That's after the market recorded heavy losses in the last few weeks amid China's vow to stabilise surging commodity prices. Australian miners such as Fortescue Metals, Rio Tinto and BHP may trade in the green zone for the rest of the day. Moreover, Shanghai Copper registered a second consecutive positive month as prices firmed on massive US infrastructure spending plans and potential supply threat in Chile. The most active July copper contract on the Shanghai Futures Exchange closed 0.9% up at 73,950 yuan per tonne, registering a 2% monthly gain. Now, before we take more updates from the Australian share market, it's time for a very short break. Stay with us.